Hey everyone, welcome back to Corporate Decoder, the place where we make sense of the money maze, and sometimes it is a maze with way too many hallways that lead to accounting policies. In this report from Primerica Inc., we are going to dive into their latest financial performance and see if their numbers tell a story of steady growth or if there are some hidden risks we need to decode. Before we dive deep, stick around if you like getting the real story behind financial filings, and make sure to join our Discord linked in the description below to keep the conversation going. Alright, Primerica incorporated a major player in financial services for middle-income families in the US, and Canada dropped their report for the quarter ending the 30th of September 2025. Think of this as their quarterly checkup, a snapshot of how they are doing financially. Overall, there are some really interesting numbers here, showing growth in some areas but also highlighting some persistent challenges. Let us start by looking at their balance sheet. This shows you what a company owns and what it owes at a specific point in time. As of the 30th of September 2025, their total assets stood at nearly $14.9 billion, which is up from almost $14.6 billion at the end of 2024. Now that might sound like a lot, but for a company of this size, it is a pretty stable picture. A key part of their assets is their investments, and these also saw a rise going from over $4.3 billion to nearly $4.5 billion. This growth in investments is a good sign showing they are putting money to work. On the other side of the balance sheet, we see liabilities totaling over $12.5 billion as of September 2025, which is an increase from $12.3 billion at the end of 2024. A big chunk of this is future policy benefits, a crucial number for any insurance company. This liability rose to over $6.8 billion, a natural increase given more policies in force. Now let us talk about stockholders' equity, which essentially represents the owner's stake in the company. Their retained earnings have grown from over $2.2 billion at the end of 2024 to over $2.3 billion as of the 30th of September 2025. This growth in retained earnings is fantastic. It means the company is generating profits and keeping them to reinvest in the business or to build up their financial strength. This is what we like to see, a company that is growing its book value year after year. Moving on to the company's income statement for the 9-month period ending the 30th of September 2025, their total revenues reached over $2.4 billion, an increase of about 6% from the same period in 2024. This steady revenue growth is something we look for, showing their core business is healthy. A significant contributor to this revenue is commissions and fees, which jumped from around $789 million in 2024 to over $928 million in 2025. For the 9-month period, this is a nearly 18% increase and points towards strong sales activity in their investment and savings products segment. This is a real bright spot in their financial report. Of course, with more revenue comes more expenses. Benefits and claims paid out rose from about $480 million to nearly $500 million for the 9 months. This is expected with business growth. The bottom line is what truly matters for investors. For the 9 months ending the 30th of September 2025, Primerica Inc. reported a net income of over $554 million. This is a significant jump from about $303 million in the same period of 2024, an increase of about 83%. This impressive growth is fantastic and shows strong profitability. Not only that, but their earnings per S-share also saw a healthy rise, highlighting how this increased profit is translating to individual shareholders. This sort of jump in net income is always worth paying attention to. One thing to note is the loss from discontinued operations. In 2024, this was a significant loss of nearly $249 million, but in 2025 it was zero. This means they have successfully divested from or closed down the parts of the business that were not performing. This is a smart move to cut losses and focus on profitable areas. It shows decisive leadership. Looking at comprehensive income, which includes unrealized gains and losses. For the 9 months ending the 30th of September 2025, they reported other comprehensive income loss of over $51 million. This compares to a more positive other comprehensive income of about $25 million in 2024, reflecting ups and downs in their investment portfolio's market value. While the core business is strong, the overall picture does fluctuate with market conditions. Specifically, the unrealized investment gains and losses on their available for sale securities shows a net loss of over $67 million for the 9 months in 2025. This is a bit of a step back from the gains seen in 2024. This means the investments they hold that are not meant for immediate sale have lost some value on paper. This is common in volatile markets, but something to keep an eye on. Now let us talk about sales. For their investment and savings products segment, total product sales saw a healthy increase of 17% for the 9-month period, reaching over $8 billion. This shows that despite market fluctuations, people are still investing in their products. Their managed investment sales were particularly strong, up 57%, indicating investor confidence in those options. The total client asset values also saw a good increase, reaching over $126 billion by the end of September 2025. This reflects both new sales and the positive performance of the markets. When client assets under management grow, it directly boosts revenue for Primerica Inc. through asset-based fees. The number of fee-generating positions also ticked up, an important metric for their administrative services. This steady growth in client assets and positions is a very positive sign. Now, every report includes this section on forward-looking statements. Most companies will throw a lot of legal jargon in here to protect themselves. Primerica Inc. is no different. They are talking about future expectations and possibilities that can be affected by many external factors. We will not dwell on the legal speak, but understand that future performance is never guaranteed. They do flag a few key risks. One area they are concerned about is their distribution structure, specifically how they handle their independent sales representatives. There is a constant regulatory risk that these workers might be reclassified as employees, which would dramatically increase costs. This is a big one to watch. Another major area of risk involves their insurance business itself. They highlight the potential for significant losses if their actual experience regarding mortality persistency or disability differs from their assumptions. Reinsurance is a big part of their strategy to mitigate this, but if reinsurers fail to meet their obligations, it could be a problem. And of course, in today's world, they mention the risks associated with information technology and cybersecurity. A data breach or system failure could be very damaging. They also mention ongoing litigation and regulatory investigations. While they do not detail specific cases, their general statement signals that these are a normal part of doing business and can lead to financial losses and reputational damage. Looking at the overall results for the 9 months ended the 30th of September 2025, total revenues saw a solid increase of 6%. The term life insurance segment reported revenues of over $1.3 billion, and the investment and savings product segment brought in over $907 million. These are strong numbers showing consistent performance across their main business lines. Their total benefits and expenses also increased by 8%. This rise is largely driven by higher sales commissions and benefits and claims paid out. This is a natural consequence of their revenue growth. For the 9-month period, income from continuing operations before taxes rose by about 1% to over $727 million. While this is a smaller increase compared to net income, it still shows overall financial health. So what is our take on Primerica Incorporated? On the positive side, their net income growth for the 9-month period is truly impressive, up 83%. This indicates strong operational efficiency and successful product sales, and that they are managing their expenses well. The increase in commissions and fees and client asset values in the investment and savings products segment, especially the growth in managed investments, is a clear sign of positive momentum. They are also successfully navigating the divestiture of underperforming segments, like the senior health business, which cleans up their balance sheet and allows them to focus resources where they are most effective. The company seems to be making wise strategic moves. However, there are some notable risks. The reliance on independent contractors for their sales force is a constant regulatory tightrope walk. Any adverse changes there could significantly impact their business model. The ongoing exposure to market volatility affecting their investments and potentially client asset values remains a concern, though their conservative investment strategy aims to mitigate this. Reinsurance is critical for their life insurance business, and counterparty risk with reinsurers is always a factor. In conclusion, Primerica Incorporated is demonstrating strong financial performance, especially in its profitability, with significant jumps in net income and earnings. Per S. Hare, their core businesses are growing and they are making smart strategic decisions to streamline operations. While market volatility and regulatory risks are present, their solid financial footing and proactive management suggest a company that is navigating these challenges effectively. Alright, that is our deep dive into Primerica Incorporated's latest SEC filing. What do you think about their performance and the risks they are facing? Let us know your thoughts in the comments below. If you found this breakdown useful, give it a like and subscribe for more corporate financial insights. And remember to join our Discord community linked in the description for more direct engagement. Thanks for watching, and we will see you in the next decode.